This podcast is brought to you by Neural Media. Are you an entrepreneur or maybe a marketer who wants to grow their business through content production? Maybe you're sick of dealing with agencies or want an outsourced solution that actually fits a budget? Well, Neural Media, our business, can help you with simple and affordable content production, saving you time and money by taking away that pain of producing the content. If you want to learn more, just head to neural.com/media, which is NEURALLE.com/media. Play around with our pricing, have a look at all the different options that you have, request or consider requesting a callback from me personally. If you have a friend that runs a business or is a marketer, do send them our way. It will help us keep the lights on and producing more juicy content. Listeners to this show receive a special discount by using the promo code UNCOMMON. If you want to learn yourself as to how to create content, maybe you want to make a podcast or your very own video, just download our free series on how to create a podcast and video at the very bottom of neural.com/media. Welcome to another episode of Uncommon, the podcast that helps you build your knowledge, skills, and mindset through interviews with unique individuals. My name's Jordan Michaelides, and I'm your host. In this episode, I have for you Oliver Kidd. Ollie is the founder and CEO of up-and-coming Australian neobank Archa. Archa, like a lot of these new challenger banks, are, I guess, a new form of digital banking aimed at disrupting the banking sector through both better customer service and product development. The introduction to neobanking is something I've wanted to cover for quite a long time, particularly after reading a white paper on the state of banking globally, and a key component of that was talking about fintech services, which in a way we've had slowly roll out over the last few years through tech unicorns like Stripe, Robinhood, TransferWise, Wealthfront, Raise, and Coinbase, to just name a few. The goal of neobanking is to bundle most of these individual services, including deposits, in an effort to disrupt the entrenched business model of the big four banks. And I think the recent Royal Commission points to why this will probably be a priority for both consumers and regulators here in Australia. This is a great episode. We covered a lot of first-time knowledge in this neobanking space. We spoke about Ollie's love of milkshakes, what are neobanks, old versus new in terms of banking, why banks struggle to change, the importance of credit, mortgages, and so forth, and why the UK is a neobanking leader. If you enjoyed the episode, please subscribe on your podcast app or leave us a review or rating on iTunes or whatever app that you're using. Show notes for this episode and all previous guests can be found at neural.com/podcast. That's NEURALLE.com/podcast. Thank you so much for listening, our regulars for coming back, our newbies for giving us a shot. I hope you'll enjoy this conversation with Oliver Kidd. Ollie, thank you for joining me.
No worries.
First question for you. I was getting into some icebreakers with Taylor before, and I hear you're a bit of a milkshake aficionado.
Former.
Why former?
Oh, it's too hard to run a milkshake blog and have a career, you know.
but milkshakes are pretty good though.
Oh, I'm a big fan of milkshakes, but I think you know, I was always a big fan of milkshakes, and I had them too much, and then I became, you know, a fat person. And so I thought I got to cut back, but it was for the blog, you know, got to get the content, got to drink the shakes, and so I gave that up. I'm still a fan, but just part-time. Yeah, look, milkshakes, any milky things or dairy things have always been my soft spot. I recently found out I've got this familial high cholesterol thing. Yeah. So it just means that it'll get you,
but so long as like all of your other markers are good, you're fine. It's just people like me and in my family, we have really high cholesterol, like total cholesterol.
Dairy's no good for that, or?
Apparently I have to cut back on my the amount of buenos I've been having. I'm like a
they
real
make those
sucker.
into milkshakes, you know.
and milkshakes as well, and basically anything that comes from the Spring Street grocer gelato spot, and there's Lavezzi down on Lygon Street is another good spot. They all make mean milkshakes, and like I said, it's always been my soft spot, but it sort of makes sense now because I remember like every time, like apparently I am lactose intolerant. I don't really know if that's true.
Yeah, I've been told that too.
I'm definitely fructose intolerant, but I don't like the lactose thing isn't as intense as the fructose stuff. So I think it's maybe just the fact that I've got this genetic abnormality and it's like my body's saying, don't eat this stuff. This is not good for you. You feel like shit afterwards.
Yeah.
But yeah, that's quite funny. I enjoy looking at the milkshake gram as well, seeing the varied options out there.
Yeah, it's like it's like a hidden secret of mine. I don't. It's very embarrassing.
Don't widely advertise it.
I won't give it out.
You know what? I think people really respect it, so I think you'd be quite surprised.
Well, the problem, I shot myself in the foot because it was like I have so much content for that Instagram, but I started by reviewing them all in haiku, which was like the dumbest thing.
Oh, no.
It takes so long to write haikus, you know, because like there's only so many ways you can describe milk.
Yeah.
And so then it got too much work for me. You know?
Haikus as well. They're sort of on the line with puns. I feel like puns is one of those things.
That's the point, right? It's funny.
It's like one of those things where some people just don't get it.
Yeah.
And like my fiance's father he's exceptional at puns, but if you don't know him, you just think he's just a weirdo, like with these weird punny jokes.
Sure.
You know, like he has to release them at restaurants and cafes and all that.
Yeah, I get that. Yeah. I feel like the milkshake blog is at risk of being called weird.
Yeah. Now into your actual job, I'm curious how you got into this, but like I did a little digging on LinkedIn and looking at your earlier career. It seems that you worked as an M&A lawyer, company secretary.
Yep.
You had a little stint there for 2 or 3 years at a tech company called Omni Market Trade. I was curious as to what was your thing around law? You know, did you always find that you were a bit of a tech head?
Yeah, I fell into law though.
Yeah.
I started with, I think I changed my degree that I was going to do at uni after high school. I think I changed it 3 times before I started. Mm-hmm. So I originally applied for biotechnology.
Okay.
And then I switched before we got offers, and I switched to industrial design.
Okay.
And I did that for 2 weeks.
Industrial design for 2 weeks?
Yeah,
okay.
Yeah. I bought all the pens. I bought everything. I had all the different coloured pens, all the different stuff. I felt like a real designer. But then I wasn't very good at it. I wasn't particularly bad at it, but I didn't love it, and I kind of wanted to be doing other things. So I was a college dropout for like 2 months. Mm-hmm. And then I decided I wanted to do law because I'd always wanted, generally speaking, to do law with a view to kind of going to the bar and being a barrister. And so I thought, I'll just do that. That's a safe degree to do. And it's the only thing I was kind of very confident about, that I knew it was worth doing.
Yeah.
The other degrees, I was always worried I was wasting my time.
Okay.
And then started off doing law, international relations, dual degree, but I dropped that after 1 semester and just finished law.
Yeah. And why, from there, you sort of, it seems like you went into a space that was really focused on corporations and companies, whether it was M&A or working as a solicitor. Mm-hmm. Why that area?
I don't know. Law school is like a really funny thing though, because like you can go in with like, because it's so competitive. Not competitive. I mean, it is competitive, but it's also like it's a really strange environment to be in, where like your mindset, I found my mindset of like what I wanted when I went in was very different to what I wanted, 2 or 3 years in or leaving. And I think when you go in, I kind of think, I want to know about law, or maybe I'll go and study something afterwards, or go into a job in this field or that field. But 2-3 years of law, you get to the end, you're like, I'm going to work in corporate law and I'm going to do, the biggest deals, and it's going to just be the best.
Yeah.
And like the reality of what that, involves is very different, obviously. Not to say that it's bad, but it's certainly not. So
you're thinking Suits, but really it turns into like The Office.
Kind of, a little bit.
It's a hard slog. For people who haven't been a corporate lawyer,
yeah.
it's like investment banking. in a way.
It's a really fun thing to
talk
about. It's like an M&A law. I worked in M&A and equity capital markets, so it means like buying and selling big companies, acting for the buyer or the seller, or defending someone who wants to buy your company, defending them so that can't happen. And capital markets being like raising money on public markets, and all the work I did was for like publicly listed companies. And so I went and did company secretary work afterwards.
Right.
But it's a fun thing to talk about. Like it's really exciting to talk with your friends about the type of deal and like this director did this, and and this is what's going to happen. It's such an exciting transaction to have worked on.
And the drama.
And the drama. But like that's if you summarize it in 10 minutes. But the day-to-day of that like 6 to 10 to 12 to 20-week process, it's reading documents and writing documents and attending meetings and writing notes, which is like fine. And I'm not, it's a great career, and I would have potentially stuck with it, but it's a lot more fun to talk about, I found, than it is to actually do, and it can get you down.
Yeah, you've got to be like a certain type of individual to like that stuff. It's like when I did my grad position at a mid-tier accounting firm. I thought I was going to do my CA, or maybe I'd go get into investment banking from there because I preferred capital markets, but yeah, it was pretty soon that I realized that was just not for me.
Mm-hmm.
Like I was genuinely miserable doing that stuff, to the point that like I would just be late for work and it looked shit. Like there was no way I was getting off.
See, I was the opposite. The more miserable I was, the earlier I turned up to work.
Really?
Yeah, exactly. Because I was so stressed about it. You just got to get in early, got to get it done. Otherwise it's going to come back and bite you.
Yeah, it's one of those things. It's I was like, oh geez, I'm surprised I didn't get offered a proper grad position after the internship. But it's just so obvious when you don't like that type of thing.
Mm-hmm.
And then for years I worked in sort of FX and capital markets, sort of on the trading desk side, and then I was working with investment banks in a new role, selling them data in some way, and it would just reaffirm my belief that was just not for me. Like it's such tough work.
But you're the in all of those kind of client service roles, there's always an element of like you just have to get it done. Because you're not the client, you're providing a service, and the service has to be good. So
exactly,
you've got to work to the client's time frames, and that kind of it's not conducive to a predictable lifestyle.
Conducive, such a common legal word.
I sound like a dickhead.
Omni market trade, that was interesting to me.
Omni market tide, yeah.
Tide. Sorry.
Yeah.
Okay, so you did that for 2 to 3 years. When did that come about? Like, what was the catalyst for that opportunity?
I had worked with some of the people involved in the business before in my days as a lawyer. Yeah.
Okay.
And I'd spent the year, I went overseas for the year before. So I'd been in Holland for 12 months and come back and moved to Melbourne, and Omni Market Tide was setting up. And yeah, there was a role going as kind of company secretary, running governance and parts of a legal function for the business. And so it was good. So got an opportunity there, and it was exciting because it was an IPO business. Like they were doing something, they were effectively becoming publicly listed.
Yeah.
And raising $5 million in the process. So it's really exciting to kind of be a part of that process and see how it works. But like a lot of tech ventures, really hard to kind of go from like the IPO is really, it's not the end of the marathon. It's not the end of the sprint. It's the start of the marathon. And, and then you've got to start delivering for everyone. And it's a tough thing to commercialize an idea like that.
Yeah, it's very, very hard. I looked at it and I saw there's so many different elements of this platform, and I was thinking, geez, like, how do you make a business like that successful without $1 billion of capital behind you?
Yeah, it's hard. It's really hard, particularly because it's a business where you're so dependent on, like, it's hard enough of itself, right, in and of itself, to build a business, like from an idea into a successful business. But trying to do that when you're already listed on a public market is really, really hard, because you've got to deliver on expectations to investors, and you need to deliver revenue, and you need to deliver numbers that people are happy with. So it's not like you're a little startup, working in a co-working space trying to build out an idea. You're kind of like, you're on the big boy, on the big boy field now, and you've got to deliver. And there's no second chances, and you kind of, it's a really tough process to commercialize an idea on a public market.
Now, I'm thinking about how do we explain this stuff, Archa, neobanking, to the audience? I went back and I made some of my own notes. I always love looking at see what Wikipedia's got.
What did Wikipedia say?
Fuck all, like absolutely nothing. Like right now, it's got 2 sentences on neobanking, and that's it.
What are the sentences? Do you have them?
Well, I got one of them here, which is a neobank as a type of direct bank that is 100% digital and reaches customers on mobile apps and personal computer platforms only. And then there's some other dribbly sentence about being a challenger or whatever. But there's not much there. There's nothing about like any of the UK businesses that have been around for a few years now.
Mm-hmm.
It's interesting. I have a fairly good idea of what neobanks are, having been in the fintech space. Maybe for the audience who haven't heard about it before, what do you think I've missed in that generalized description?
Well, I think kind of fundamentally it's a neobank or a challenger bank, and people have different definitions for each: neobank, challenger bank, digital bank. I think fundamentally it's the idea that you don't need to be a huge business to provide the service that banks provide to people, which is taking deposits and making loans. There's no reason now with technology and smartphones, there's no reason why you can't provide that service really efficiently without billions and billions and billions of dollars of capital behind you. I think it's the idea that you can have a startup, start a business and try and disrupt that space, which traditionally is not a space that could be touched for a number of reasons, predominantly regulation. So it's really it's kind of like the final frontier of fintech, I think. It's the big rocks in the pool is the banks, and traditionally I think everything around them has been disrupted, payment processing, credit cards, businesses, all that kind of stuff.
Yeah.
But now like the foundations, which are the banks and that regulatory environment, that's starting to shift a bit.
And because banks really, this is the way I explain it to people, banks are really like a bundling of many different services.
Correct.
And like you said before, we've done things like FX, payments, random debit cards that have specific reward systems, peer-to-peer lending, not so much. Well, there is lending as well. There's a lot of like mortgage lenders, like random mortgage lenders, but they're underwritten by the banks. That means, the banks are essentially giving them the money to do so.
Correct.
Or matching
SME lenders as well is a big space.
Yeah. So in a way, banking is a bundling of many different financial services, essentially. Another way I've tried explaining it to people is the like people who are more financially aware, which will have a lot of people in the startup space here, is the capitalization structure. So like traditionally in banks, you would get bonds and deposits, and then you finance that to then give out lends, which is all your assets basically, or cash at bank that you hold as well. And then you make basically a fee off that essentially through charging interest income. And then you have other random little things like you might have for brokerage and stuff like that, which gives you brokerage commission-based income.
Yeah, I think the simplest way to put it is, if you're looking at what a bank does, which is what is the thing that makes a bank different from all the other different financial institutions, it's taking deposits, right? Like that is the fundamental thing that changes what a bank does, really. I think at its core, it's that you're holding other people's money on their behalf. And to become an institution that can hold deposits, an ADI, authorized deposit taking institution, you need to meet lots and lots of different requirements. To be able to make a loan to someone, or to be able to give financial advice, or do a lot of the other things you're referring to, you don't need to be an ADI. You can just go and get a credit license or a financial services license from ASIC. But it's a different question entirely, much more complicated, long, onerous process if you want to become an ADI. Because at that point, it's kind of the entire financial system that matters, because if you go under, people lose their money.
Yeah. And so an ADI, just for people who don't know, is an authorized deposit institution, right?
Deposit-taking institution. So basically a bank, someone that can take deposits. Yeah,
and it's in the past here in Australia, in comparison to, say, America, licensing is very hard to get. Like it's very hard to become a deposit-taking bank.
Well, kind of all over the world. I mean, the UK, Australia, the US, it's really, really hard to become as a deposit-taking institution because there's a minimum amount of capital that you need to even be considered, to even go into the process.
Yeah.
And in Australia, say it was 50 million. And then recently the laws have changed to introduce kind of like a stepping stone license called a restricted ADI.
That's right. Yeah, I've read a lot about that.
Yeah, and in that, the minimum capital requirements has been reduced, which is 3 million plus another million in resolution reserve. So it's much easier, or at least tangible, for a startup to go and do that.
Now, that 25 mil you're talking about, so what happens with the bank is you've got equity capital, and then part of that, for people who are listening, a small percentage of that has to go in something called Chet 1 or Set 1, whatever it's called. You've got to have a certain amount where it's basically completely liquid and has to be able to cover a certain portion of your deposits, right? That 25 mil you're talking about, that isn't inclusive of that, is it? It's just total capital to start up the business.
Capital backing, yeah, exactly. So it's circa 50 was what it used to be, 50 million. And it's, now you're in a position where it's really complicated, but once you get to the point where you're actually operating as a bank, you need to have a certain amount of liquid assets, you have a certain amount of, and that the ratio of that of liquid assets you need to be in a position where you can use that to cover liabilities, bad loans, different things like that.
Yeah.
And it goes on. It's super complicated, which is why banks are so complicated.
Yeah. And I mean, the main benefit the banks have had is because of the capital structures. So basically all their costs are related to actually giving the loans and doing the banking business. But then they've got these other costs, which are the physical stores, like the branches, and the old tech that they essentially have. Whereas the new neobanks, they basically have, it's all digital, right? Yeah. There's no need for branches. Most of what you're spending your other expenses on are developers. Am I wrong in saying that?
No, I think it's largely right. Yeah. I think if you look at like a big bank like ANZ or Westpac or whoever, any big Australian bank, any bank anywhere really, like you have legacy technology systems, which is a real problem for them. It's why I think in many cases banks are quite slow to bring new products to market because even if there's no risk involved in the product, or it's like, I think a really good example is like quicker payments, for example. Like that's all well and good to do quicker payments, but if you've got legacy technology systems that have integration layers on top and another integration layer on top of that, there's only so much reverse engineering that you can do to make the consumer feel like they have an instant payment kind of happening. Like certain banks have worked with big technology providers to try and build new core banking systems for like 5, 6, 7 years and failed to put anything in the market because it's so complicated. For us, and as someone who's trying to build a challenger bank, it's a different proposition, right? Because you're not starting with what are all the problems that we have and how do we fix them. You start with what's the best possible situation that we could be in now? Well, who's got the best product? How do we go about getting that? How much is that going to cost? And is it scalable going forward? Do we know that it's going to put us in a position where we can innovate quickly going forward? And then you kind of come up with a technological blueprint and you execute on that. And it's not as if you've got this huge problem you need to deal with that's already sitting there. You kind of get to start fresh, you have no overheads. And something like a challenger bank, I think it just would not have been possible 10 years ago, even with all of this core banking, all of these new systems and whatever else you can get, because people didn't have smartphones. So it's not as if you had the channel to get to them. Even if you had the ability to build a totally digital bank, you kind of be expecting them to log in, best case, from a desktop computer or a laptop, right? That wouldn't have had the same rate of adoption. For most challenger banks around the world, the big difference is in onboarding. You can onboard yourself in 5 minutes, 6 minutes, have a card generated or sent to you. In some cases, just generated onto your phone. You can fund it instantly and spend with it. That's very different from how you would even, like right now, how you would onboard with a major bank in Australia. Oh yeah, it's an absolute nightmare. And I've got a classic example recently where I just tried to get, obviously we've had a recent credit crunch here in Australia with the Royal Commission happening and banks tightening lending. So a card that previously I was offered a certain amount of credit on, I want to increase because I was moving my partner's card basically into that, and then we have an additional card holder, etc. This is just before the Christmas period. It ended up taking 2 months to get the fucking card. And to get the credit limit increase, it took over 3 weeks. Now, it could have been as well the fact that I'm pretty sure our business banker left,
And they were also having restructures at NAB because of what was
the question, right? It's like, why does a person need to do that for you?
It's ridiculous. Absolutely ridiculous. Like we've had
why does a person's continued employment at that bank? Why should that affect that you're trying to merge an account and get an increase in a credit?
I know. And another example was this week when we finally got a card and we got everything set up and all of our systems set up and changed to that card and whatnot. She wanted to view her card in a NAB app. So we bank with, most of our banking, business and personal is done with NAB. And what happened was, to actually view that, I had to go in branch and allow her to view that as part of her account. Couldn't like put in a request on my account or anything. There's nowhere that you can do that. It's such an awful system. And so, yeah, I find all of this very, very intriguing.
And branches still get used, right? But you don't see a lot of young people going in there. People avoid it. So I think that it's kind of a misalignment of priorities, and it's just an expensive process. So it's also not, I mean, if you look how a bank makes money, banks don't make a huge amount of money out of transaction banking accounts, off everyday people. They make money off cross-selling credit products, upgrading you from a transaction account into a personal loan or into a mortgage. Yeah. If you look at, the profit of a major bank in Australia from retail, from consumers, not businesses, but just from the retail, the profit they get from people, it's like in the 90s percentage-wise. 90% or higher from mortgages. Yeah. So there's no incentive to make that kind of retail, everyday transaction experience better, but there is an incentive to make it usable. And I think that's where they're at.
It's funny you mentioned that because I was reading, I just read a recent bank primer, just revisiting where the industry's at. It was about 120 pages by Investing by the Books, really good research firm. And it's so funny because, 80% of business... What's interesting to me about that is that the weighting of retail to business in a local economy and how that affects the country. Like, for example, in Scandinavia, it's very similar to Australia in terms of our finance sector. 80 to 90%, which is actually typically the global average, is focused on retail products. So the bulk of your revenue comes from there. In places like Germany, where they've got massive productivity and they've had positive GDP for years, I don't think they've had a recession at all. The bulk of their, products are tailored towards business. Like retail banking is very, very simple over there. I think 30% of their business accounts to retail. There's also the fact that they don't allow there's anti-speculation laws in Germany, which makes it harder to go flipping properties and stuff like that. But the bulk of their lending goes to businesses for productivity. So it's always interesting to see how that affects the local economy. That gets me thinking about, what do you guys see as this sort of neobanking business model comes to light? The obvious thing is you get a current account and a debit card. What do you think about when it comes to credit?
I like it.
Yeah?
I think people need credit. I mean, it's not... There's no reason, nothing's changed to say that young people don't need credit now. And I don't mean just young people, anyone, right? Nothing's changed. I think the problem is that it's not being presented in a way that's clear. It's not being presented in a way that seems fair, objectively. And I think that's the kind of key problem with credit. There's no reason why challenger banks shouldn't be getting into the credit space. And internationally, they have been getting into that space, and we intend to. It's just about making sure that your approach to consumers and approach to being consumer-centric flows through to how you design credit products. Yeah, I think it's not enough to build a pretty app and offer a credit card. You need to build a pretty app, but you also need to make sure that the way your credit products are structured and the way that consumers interact with those credit products has some cut through and has a clear kind of difference compared to others. And I don't mean your interest rate is better. I mean, throw out the interest rate, Why, if someone needs every 2-3 months an extra $500 because their pay cycle falls outside of their rent cycle, they don't need a $5,000 credit card year round. So service the need of the customer. It's not a one product fits all approach. It's about really reassessing why people would use a bank and what service a bank can provide, because holding physical cash is no longer, something to sing and dance about.
Yeah.
Like that's just not a thing anymore. So it's about making sure that the products that you are going to sell and the services that you are going to provide to consumers are fit for purpose. And I think with major banks globally, the products aren't fit for purpose because people are too one-dimensional when it comes to the design of credit products. And it's not enough to just say, all right, let's take our interest, our great, credit card. Let's make it a black card. Let's throw some perks in and reduce the interest rate, give away 100,000 frequent flyer points. That's not enough because people don't care. And there are people who go around and hunt those frequent flyer points down, and that's great. But like that costs money, like it's like $1,000 to get 100,000 frequent flyer points. So you're spending money to get those customers.
Yeah.
So it's not enough. I think from our point of view, we like credit. We don't like the way it's presented to consumers, and it's not about the interest rate. It's about making sure that it's not right to approach it as we have 100 customers, how many can we cross-sell into this credit product,
Yeah.
And the approach should be, we have 100 customers, like what are their problems and how can we fix them? And we're not a charity. We're not giving away this stuff for free, but we're also not going to just try and get people to move across into a credit product they don't really want or need.
Yeah.
Our philosophy is that if the credit product is good enough and it meets the needs of someone, they're willing to pay for it, and we'll charge a fair price for it.
Yeah, because it's one of those areas that you definitely have to go into touch, because obviously people are going to want credit, as you said, and it's also a key driver of the economy and of any sort of financial services business and how they can actually make money. But it seems like...
Well, that's the only way to make money.
Yeah, and it seems like the way that you're approaching it is as the modern tech ethos of a product manager who's trying to find a solution, as opposed to the modern banker who's trying to find a few basis points here and there.
Exactly.
So, yeah, I think that's been the big thing. I noted you had this interview. I don't know if it was on like the 7:30, like it was an excerpt from the 7:30 report, or if it was from, I think it was that one, not the AFR one on Emily Skye, but it really reminded me of this whole, like you said, spoke about how the mortgage for a lot of millennials is becoming less and less desirable and other things are. And it just got me thinking about this sort of, this Kevin Kelly? Yeah, Kevin Kelly from Wired. I think that's his name. The guy who was the founding editor at Wired. And he talks about this whole like a SaaS for everything model. Like if you need pots and pans, you won't buy pots and pans, you'll just rent them for the night.
Yeah.
And yeah, it was, I just started thinking more and more about that. Like, what does that look like? If you got like a level of credit or, services like that, a SaaS type service where it relies on credit. I don't know. It's very interesting how that could work out inside the app.
Yeah, exactly right. I totally agree with you. I think that probably will be a service for everything, SaaS for everything. I think that's exactly the way everything's going. I think the comment you're referring to from that show was that, young people are finding, I think banks are obsessed with whether mortgages are affordable and who's going to make most affordable mortgage. But the kind of assumption underneath that is wrong. I don't think mortgages are that desirable anymore. I think that from our point of view, if someone wants to get a mortgage, fine, right? But we're also kind of going to step back and say, well, do people really want that?
Yeah.
What do our customers want? And certainly at first instance, we're not going to be offering mortgages. It's just something that, like, it's a really easy way to make money. And so for us, it's like, yes, that's a way to drive profit, but it's also really boring. I'm just so bored by it. It's just like, you can do so many more cool things working on like an everyday transaction account and just produce a really, really good transaction account with really interesting, fun, fair credit, better ways to access credit. If someone wants to go and buy a house, fine, they can go and get a mortgage and maybe we'll provide that to them. But again, it's just one of those things where it's like, I think attitudes are changing. I don't think that home ownership holds the same kind of weight anymore. Yeah. It's the same thing with, all trends point this way. Like people spend more money on what was it? People spend more money on cleaners in their home, millennials, than their parents do on average.
Really?
Right? People who are renting. So it's like people pay for convenience and lifestyle now. They don't necessarily look for like, oh, I can't get a cleaner because that's just luxurious. That's just ridiculous. I can't get a cleaner. I think the attitude of millennials and young people now is kind of like more of a YOLO attitude, which is like, if I want a cleaner, I'm getting a cleaner because I'm living my best life, you know?
Yeah. They're sort of living the best life that they could possibly live.
Correct.
Within their means, I guess.
And that's exactly right. It's like by the same token, it's like, yes, they're spending more, but also they're also not going into huge amounts of debt. You know, they're living within their means, but they're spending it on things that they like. And I think that's a pretty fundamental shift in attitude. That
would be very interesting to look at sort of, you know, that market that looks at credit tied to households, like where the bulk of that sits. Like it would be obviously within the baby boomer generation simply because there's more of them at the moment. I'd be very intrigued to see what the age demographics are on that.
Yeah.
What did you guys learn from the Royal Commission?
The report was too long.
Yeah, it was so long. It said not much. I mean, you're better off just reading the bullet points.
No. Oh, look, I think for us, from our point of view, it's like it's not hugely surprising. I think, you know, bonus structures and whatever else, shock horror, designed to increase banks' profits, and people kind of get caught in the crossfire there in terms of bad advice, no advice, that kind of stuff. It's, you know, it's, of course, like everyone, you know, it's disappointing to see the people getting ripped off like that. But for us, we kind of consider that we're just so far removed from that. Like, I just don't think that, like, yeah, we're in the industry, but for us, it's like, I don't see Archa having, you know, a floor full of people trying to broker mortgages, sell mortgages, or sell financial advice to people on their superannuation anytime soon. I think it's just a different type of business entirely. I think from our point of view, it's, you know, the key lessons to be learned are stay customer centric, you know, make sure that the staff in the business are incentivized in a way that would align with how you want customers to experience your business. If you're going to incentivize someone to sell a product, they're going to sell it inevitably to someone who doesn't necessarily need it. So I think that making sure bonus structures and things like that are aligned. I mean, we don't have a bonus structure at Archa, you know, we're a startup and we intend to stay that way. It's about making sure the business is as nimble and lean as possible.
Let's get into that. You guys, I found a few different blurbs. I think things have probably changed since August of last year. You've had you've had some investment. You did an investment round, I think it was with Emily Sky. Essentially, from what I can understand, you guys are building a retail bank, starting off with that debit card. Where you're at?
We're moving. We're getting closer to launching. It's really exciting. Yeah, we're actually getting some real traction now. So I guess, you know, going back to the start, so I've been around for about 18 months as a business. I started the business and we raised some seed money first half of last year. I guess the goal of that was to raise the seed money and prove that we can generate a wait list, we know how to market ourselves, we can build a brand, we can build a credible team, and we can build the foundations of a product. We actually did a lot more than that. We built the product. We built a product. We built a 12,000 person waiting list. We've got a really, really good team now, and we are closing in on a launch. And I think, you know, for us, it's not enough to go to market with, you know, something that looks nice and does some things. We want to go to market with everything we possibly can to deliver a really good experience to customers, I think. And I think that's what we've built. I mean, it's the product that we've built. The way we see it is better than any other banking platform in the country that we've seen, and on par with some of the best ones in the world. How so?
What could you say about its competitive advantage in comparison?
It's one of those things where it's kind of hard to point to, well, look, you know, we have this particular feature, because all the challenger banks do all the same stuff, generally speaking. You know, it's like, you know, enriched data, better transaction notifications, some data on how you spend your money, you know, much better insights on your cash flow, easy ways to interact with your business, you know, chat-based help, easy ways to order a new card or replace a card, just generally a really good consumer experience, easy way to pay people, like all the things you want to do, very intuitive in the platform. But like fundamentally, the difference is, you know, the look and feel of it. You go into the platform and you see, wow, this is so much better, you know? And it's kind of like, I think, certainly in Australia, I think consumers have been just left behind in terms of retail banking stuff for so long. They don't really know what value looks like. And for us, it's like when you open this platform on day one, even now you open it as a beta tester, it's mind blowing that the reaction people have in terms of like, this is just such a better experience.
Do you guys have beta testers right now?
Yeah, beta testers for the platform. Yeah.
Okay. And when do you think it will be launched? In the next few months?
Middle of the year.
Middle of the year. Okay. Yeah, because there's a few interesting models there. Like, Up has this really weird one, not weird, but like, they call them partnerships, but it sort of seems like they're just making commission off recommendations to others, like integrations. Maybe that's a better word. Have you seen that, how they can offer like Afterpay or some elements within their platform? I
think, from what I understand, you can see upcoming Afterpay payments in your platform if you bank with Up. So you can see, like, if you've bought a handbag and you've got like 2 Afterpay payments coming up, you can see them, and so you can kind of predict your cash flow.
Yeah.
And like, I think that's really good. I think, first of all, I think Up's great. I think they're doing a really good job. And it's, I think it's everything that people would want from a banking platform. And by integrating with third parties, I think that it's a really good illustration of the kind of shift in attitude when you compare challenger banks to traditional banks. It's not this approach of, how do I wall the customer in? How do I make sure that this customer is my customer and they don't leave? It's very much like an open border approach of, if by working with Afterpay or whoever you're working with, it will make my customer's experience better, then we should be doing that. Because if we don't, someone else will, and then we'll lose the customer.
Yeah.
I really think that, like, can you ever imagine a big Australian bank partnering with a company like Afterpay or anyone else and making their service visible? Not necessarily that you can sign up as a customer in the platform, but even visible in their app.
No,
it's like
because beyond the realms of
exactly.
Yeah.
But it's beyond the realms of reality. Like, it's just never going to happen.
Yeah.
Yeah. It's such a material shift in thinking, I think, and that's why anyone can sign up to Facebook and build an app on Facebook and make it available to consumers on their platform, because if you couldn't do it there, you'll do it somewhere else.
Yeah. It had me thinking as well about, the competitive advantage got into the idea of, why do you think the UK has been such a leader in this stuff? We've got these banks like, is it Monzo?
Yep.
There's obviously Revolut. That's one of the key ones.
Monzo, Revolut, Starling, Atom Bank,
Starling,
N26. Yep.
They're all meant to be coming out to Australia, supposedly. Allegedly.
Yeah.
Allegedly.
Yeah.
Why do you think it sort of kicked off there?
Well, I think there's a few things. I think, I don't know, where do you start? A couple of things. I think that the ability to raise capital for kind of newer ideas in those markets is perhaps a bit more free-flowing. I think you kind of have access to more. I think the capital in those jurisdictions has a bigger risk appetite, and trying to go to someone and say, I'm starting a bank, you have a pretty good proposition to get them to give you their money.
Yeah.
But that's one thing. But I think the other thing is that regulation changed in the UK 3 years ahead of where it changed in Australia. Yeah. So the idea I mentioned earlier, they introduced this restricted ADI process in Australia. Yeah. That was introduced in the UK 3 years prior.
Right.
So they're 3 years ahead of us.
Does that exist in the US at all? Something like that?
Yeah, it's a different type of licensing process in the US.
Right.
But it's, again, like, there are startups who can take advantage of these processes there as well.
Okay.
Chime is one of the US challenger banks.
Chime, okay.
Yeah, $1 billion valuation.
Of course it is. Yeah. Good old unicorn.
Yeah, well, challenger banks, unicorns are plenty. Yep.
Yeah. So, okay, so you think it was mainly to do with the regulation? I think
it's I think it's the regulation, it's the availability of capital, but fundamentally as well, it's like, in London, you have a very international audience, right? Like, you have people coming into London every day setting up bank accounts, students, professionals, travelers, whatever it is, right? If you wanted to set up a bank account with Lloyds or Barclays or whoever, that process sucked.
Yeah.
It's shocking. You had to go to the branch, with some ID, with a power bill. If you're a student and you've just turned up, you don't have a power bill. You don't have a phone bill. Do you know what I mean? And so I think for these guys like Monzo, Revolut, others, you can launch a service and target it at that kind of incoming market. And that the volume of those customers is so big that you can get real traction just off new customers, not off switching customers, you know? And I think that, coupled with the mindset around startups, which, you know, the public mindset around startups has changed a lot in the last few years as well. And I think maybe it kind of is, again, something that flows from bigger economies like the US and the UK into Australia. I think they're a bit ahead of us. But that kind of like that trust dynamic of like, I trust startups with my stuff.
Yeah.
And I trust startups in the sense that I'm happy to go and stay in some random dude's house, you know, and I'll pay him money over the service. That's a weird thing.
Yeah.
You know, 10 years ago, it was a weird thing. I'm happy to sit in this guy's car. Like,
yeah.
I'll let some random guy pick me up in the car, and I believe it when Uber tells me that they've got a 4.78 rating. You know what I mean?
And it's weird though, that, isn't it? It's weird that it's a form of that, you know, creating confidence in a way.
Completely.
Yeah.
And people now trust startups. Like, people trust businesses with increasingly important parts of their lives. And the most important part is where you store your value, which is, you know, your money.
Yeah.
And I think that's finally kind of, that damn wall is finally broken down, and people are now willing to trust startups with parts of their money. And I think over the next kind of 3 to 5 years, it'll be with salaried payments. People will get salaries paid into these accounts run by people in their 20s, you know? People who are starting businesses because they know they can provide a better experience.
Well, it's funny you mentioned before about students and so forth coming into London, and then, you know, they can't get a bank account and they sign up with like a Revolut, and now because they're so happy with what Revolut's done for them. And I know just myself, I've only ever changed to one bank. I mean, I have different services like cards and so forth with others, savings accounts, whatever, but the bulk of my banking has always been done with basically one bank.
Mm-hmm.
One time in my life I switched from Westpac to NAB, and that was it.
Yeah.
So you can imagine if you can get, you know, like those sort of Dolomite accounts that you used to have?
Smart.
If you could get those as a startup, get those, I guess, younger people who are wanting to save, that in and of itself could be an interesting market. You know, and students that come over here as well. It's probably very similar in Australia.
100%. And like, it's very expensive to acquire banking customers for major banks, you know, super expensive. It's like $150, $200 to acquire a transaction customer.
Right.
More in some cases. So it makes sense that you would go and try and capture when they're young, because it's so rare that people change banks.
Oh.
If you look even in the UK, more people get divorced than change banks.
Really?
Yeah, you're more likely to get divorced than change banks.
Holy shit.
So it's a really tough gig to try and build a product so good that someone will do something like that. You know, it's a really tough gig, but
that's amazing.
All of the challenger banks have proved that it's possible. And I think that if you're asked, you know, would you rather this or that in terms of banking products, they're all much of a muchness, and they're all kind of not that exciting. And so I think that statistic is a bit misleading, because you're kind of asking someone to pick between going to the dentist and going to get an MRI. Like, they're both not fun experiences, so who cares, you know? But then if you say, oh, we can go to the theme park, like, that's a different option entirely. So it's not really apples and apples. And I think that challenger banks have kind of introduced a new option, and like a fundamentally different option, which kind of flips all those statistics on their head.
I'm thinking about where does this go? You know, we've spoken before about how fintech for a few years was like this up and coming trend thing. Now it's moved into neobanking. You know, in this bank primer that I read, we talk about the idea of crypto-related services or decentralized services being the far future. You know, I know for you guys, you would be intrigued by where all of this is going. What do you see in that regard? I
think the next step is, well, first of all, when Monzo and everyone were in the UK starting out, I think a lot of people were saying that this is the change, and that these 4 or 5 businesses are the change that everyone's talking about. That's proven to be wrong, right?
Yeah.
Because off the back of them, there's been 10, 15, 20, 30, 60, 70 others. The licenses that have gone out in the UK, the new banking licenses, is like 60 or 70 in terms of like restricted licenses. You know, it's huge. And so the change keeps coming is the first thing. The other thing I would say is that approach to kind of like openness is probably what I think is the theme going forward. Okay. You know, you have changes for open banking coming in Australia. That's already happened in the UK. It will happen elsewhere. And it will become the norm that the place where you hold your money is not necessarily the provider of how you interact with that money. Mm-hmm. I think, there'll be open banking platforms, and we are looking closely at this because we think that is the future. Mm-hmm. It's not enough to just say, well, we're a licensed ADI, we hold deposits, so we own the customer, because that runs contrary to the whole thing. So the goal shouldn't be getting to an ADI status where you can take deposits. The goal should be, how do we build the best possible product for customers so that no matter where they hold their value, they can access it through this platform and make the most out of it.
This idea of openness, I've heard a lot about this open API in the industry. This isn't part of the new payments platform, is it?
No.
Okay.
No,
well, how is this different?
So new payments platform is, so you send money with a BSB and account number.
Yeah, it's like instantaneous transfers, essentially.
Yeah, so it's instant, but also you can, instead of paying to someone's BSB and account number, you just type in their mobile phone number or their email address, and it'll be linked to an account. So it's obviously a much more convenient way, and you can own that mobile number as an account, or you own that, it's called Pay ID. You might have seen the ads on TV with the goldfish. So that's the new payments platform, right? It's a quicker way to pay people. Open APIs is a bit different. That's more for open banking.
Okay.
And so they are really designed to provide people with access to information about themselves, information about their financial information, basically, without having to go and log into their platform. So,
okay, really?
If you remember Acorns, the wealth management app where you can round
Raise
up.
Invest now.
Raise now, yeah. So when they first started, people were saying, because they would ask you to give your email and password to them.
Okay.
They would log in to your bank from there.
Right.
And they would take the transaction list, and they would see, because it's a fair question, right? How would they know when I spend my money? How do they know how much to round up? Because the bank doesn't share that information with people. Why would the bank share that information with people? That's not appropriate.
Yeah.
So basically the way that Acorns got around it is, give me your username and password, we'll log into your account for you, you won't know what's happening. We'll scan your transaction history, and we'll automatically do roundups from there. We'll then trigger a payment and send the money to us to raise so that you can round up, right? It's a very manual process for something that's very techie and automated, right? With the open APIs, the idea is that the banks are legislated and obligated to provide API access. So, access to an application, so access to effectively a pipeline of information from inside their systems that any developer can plug into with the right authorizations, to provide that information back to that customer in a different platform. So the obvious example is, if you have 6 bank accounts and a mortgage and a stock trading account and your public transport card, how do I find out my net worth with all of those things in one place? Well, you're not going to log in and, look at all the different pieces of information and add them up manually. You'll plug into all the different APIs and import them in real time so that you can see all of those different things. And that's the first step, just having visibility over it. The second step, which is not, really being contemplated in Australia yet in any real sense by the banks, but it is coming, will be the ability to trigger a payment from outside the platform. So not having to be in your ANZ or Westpac CBA account in their app. You have to be in the app to trigger a payment to someone. You could have this third-party platform, which you like to use, trigger that payment for you through an API. So effectively, the banks kind of start to lose control of the customer's face-to-face attention, They can start to control their money through other means, because there's such a barrier to competition, and it has been for so long, that you need to be in the bank or in the bank's website, on the bank's app to do something. But there's no reason for that. It's just anti-competitive.
It's there. I remember this policy now, and I remember reading about it and thinking, this is a big deal. Unless you're someone like me who does enjoy every now and then going and calculating all these different items onto a spreadsheet.
But you don't. Do you enjoy the process, or do you enjoy the outcome?
A bit of both. I'm like I said, I did an accounting degree, and I was going to do that. Yeah. But it's incredibly frustrating because there's no true wealth app. Yeah. It's if you're with
you'll see a
wealth,
boom in those, I think, over the next few years. I think that's probably what's next.
I think so, yeah.
Because it's now possible, right? It's possible to provide those services effectively.
What else becomes available with that data? Is it mainly just transactional data?
Yeah, it's transaction data, but you've got to think about why that transaction data is relevant, right? like there's a rumor going around that when you apply for a mortgage, if a bank looks at your transaction history and you have an afterpay payment, then your interest rate goes up how many basis points, right? Because you're considered more credit risk.
I've heard that. I've heard the same goes for Uber.
Users of Uber?
Yeah.
That's an outrage.
Yeah. I don't know if that's really true.
Anyway, that is an outrage. But you got to look at like what happens with the data, right? So for us, like when open APIs become available and we start to access that data, we can do a better job assessing your creditworthiness, but we can also do a better job of assessing whether you can afford the credit that you're proposing to borrow. And if we think, of course, you can afford it, that's a better outcome for the consumer. The consumer can get a better interest rate. You are a lower credit risk because we have more data on you, right? Like we can make a better decision. Because lending in banks is a numbers game.
Yeah.
You lend to as many people as you feel like your credit risk appetite allows for. And you assume that based on the data you have on them, 3% of them will default or whatever it is, right? So with better data, not only can you make those 100 people, you can get better insight on those people, but you can also say, well, actually, we're probably only going to lose 2.5%. Maybe we're going to lose 5%. So you make better decisions.
Or you can integrate things that stop them from defaulting at all.
Yeah, but there's also risks that come with this stuff. Like open API banking data, the minute Facebook asks you to give them your access to your bank through an open API, I mean, imagine the stuff they can sell you, because your transaction history is really a really good indicator of your lifestyle.
It's very, 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 very valuable.
Completely. And that's why privacy is so important with these guys, because with Facebook, but with banks, particularly going forward, is like that is the holy grail of data, right? Like if you had to pick whether you want to know where I've spent money over the last month or which Facebook videos I've watched over the past month, you're going to pick the money one every time, because that is actual evidence of where I spend my money, right? So, I mean, that's a marketer's dream. And so the real value here, I think that banks need to recognize that they have sitting in their pockets, and I'm not suggesting they should go off and sell it, but that's where they're all trying to get to, right? Like I think banks know that customer transactional information is the most valuable data they hold. And so all banks are trying to kind of put themselves in a position where they have this thing called a single customer view, which is like, I think the best evidence of how not to do this is, I heard a story recently of a friend who used to work at a major bank in Australia, and someone was applying for a mortgage, and they came in to the branch, and they had to, as a part of the process, they had to declare obviously all the liabilities they have, so the credit cards, etc. They had a credit card with the same bank that they were applying for the mortgage with. Mm-hmm. They went into the branch and they said, I need to apply for this mortgage. I'm doing this process. Can you help me? I just need to put the credit card information in as well. The person in the branch couldn't access their credit card information because that's stored in a different system.
Wow.
Right? So they couldn't, the two profiles are not linked. And that's what people misunderstand about banks. This spaghetti technology system that I was talking about earlier is so bad that if you bank with NAB and you have a deposit account, a savings account, a home loan, a credit card, and a personal loan, you have all these different financial services with them, maybe the deposit account and the savings account are linked. It's not as if you have one profile with all these different services linked underneath it. Mm-hmm. You have all these different services with individual profiles linked underneath them.
Wow.
Right? So all banks are trying to get to this thing called a single customer view, and some banks have gotten there, where you have a profile of the customer and all the different business they do with you underneath that. Mm-hmm. But data is the new oil, as they say, or whatever it is. So for banks, it's like they're trying desperately to consolidate information so you can get a better insight into the customer. And for challenger banks, they're at a real advantage in that regard.
There's a lot here that I haven't covered and I want to cover, but we've cracked over an hour. We're an hour and 5 at the moment. So let's finish off with some short, fast questions for you.
Yep. I don't know how insightful I'm going to be.
What does your morning routine look like?
Don't have one.
Okay.
I don't know. In terms of what it looks like, I don't know. I've always liked to get to work early. I'm a real early person, so I tend to get to work at like 7:30, 7:45.
Okay.
And I just like to be the first person at places.
Yeah.
That's something I like to do for whatever reason. It's not like I expect other people to do that. Yeah.
Evening routine? How do you decompress at night?
It's like a real challenge. I really struggle with that.
Yeah.
And I think there are obviously ways to do it, reading and meditating or whatever else. But I think for me, like I find that I have to force that stuff. So I rather just watch like a TV series or something. And like, but also like, I think the main thing is to just focus on one thing, you know, like if I'm watching a TV series whilst also playing on my phone and also having my laptop here and switching between Instagram and emails and Twitter and the TV show, that doesn't help me. You know, I'm still stressed at the end of it. But if you just put everything away, I find, and I just watch like the show and do nothing else, then I think I tend to relax a little bit.
Okay. If you had to gift a book to the audience for Christmas, just one book, maybe that's something that's had a major impact on you or something you've always liked, what book would it be and why?
Or maybe two. I really love that book, Letters of Note.
Okay.
I don't know if you've heard of that. It's
I
don't know, it's letters of note, correspondence deserving of a wider audience.
Okay.
So it's like historical letters that have been written from famous people to other famous people, other times just nobodies to nobodies. But it's always, they're always really interesting letters.
Okay.
I forget who wrote the book. Someone Michael Usher, George Usher, someone.
Letters of Note.
Letters of Note. Okay. It's really good. And they're just super interesting. And it's like, but I'm, you know, former lawyer, also I like writing and I like the English language, so I find it more interesting than others. So
I love that stuff.
Don't hold it against me.
I find that sort of stuff very intriguing, particularly when you know a little bit of backstory about why they're writing the letter.
This is what the person's done, right? They put the backstory in and then they have a copy of the letter and then they type it out so you can read it because it's often handwritten.
Oh wow!
Yeah,
I'm gonna definitely get that.
Yeah, it's very good.
Last question for you: if you could have a billboard anywhere in Australia, where would it be, first of all? And then what would you think about saying on it?
I don't know. I really don't know. This is a tough question because I feel like I have a lot to say, but I'm also quite reticent to say it.
Another classic legal...
Yeah.
The legal fraternity like to use a lot. If you had to pick Melbourne, where would it be? Like, are you a Punt Road type of guy? Are you more like a fitness?
If I was going to advertise a product, or try and get a message out, I don't know. I always liked, speaking of Melbourne, I've always liked that thing on Punt Road, and you mentioned it, that big factory on the corner of like Punt Road and Alexandra Avenue. There.
Oh, yeah.
The big building that's being turned into.
The silos.
I just thought the silos. Yeah, that's just, and I know that it's a good spot too because Apple always advertises iPhones there.
No, it is. For people who haven't been to Melbourne, when you drive down Punt Road, this ginormous hill down to a very low-lying river, it's these three silos which stand out. And I don't think they're
factory.
Getting... Yeah, an old factory which has now been turned into like a sort of...
I'm sure it's heritage. I don't think they can destroy it.
Oh, no, there's no way. I think it's called the Pyrex silos or something like that.
Yeah, you're right.
Yeah, it's a great spot. Maybe you'll chuck an Archa advertisement on it.
No, I think I'd probably put on there, my Uber rating is not reflective of my quality as a passenger. And I've been unfairly judged.
Really?
I feel that way, yeah, for sure.
Yeah. I think the key to a good Uber rating is talking to the driver.
Yeah, I agree with that. And I'm not a very talkative person. Like, I'm a bit of an introvert when I get in an Uber. I don't like to talk, and it's not done me any favors. But I would say that, like, one of the things that annoys me most in life is when I get out of a taxi and I've been having, like, shit-hot conversation with the taxi driver, you know, like, really great banter. And I think that was great. And then I realized it was a taxi and no one's rating me for it, you know? Waste of energy. Total waste of energy.
Yeah, that would suck.
Yeah.
They need to get on the Uber platform. You know, in Sydney, they've got Uber Taxi. Like, you can select taxis. Some taxi companies are allowed on the Uber platform.
Really?
It's part of the legislation or the deal that they got with Uber.
Mm-hmm.
Anyway, I'm waffling. Where can people find Archa and yourself on the interwebs?
Archa Money, ARCHA Money, on any social platform at Archa Money. Instagram, LinkedIn, Twitter, Facebook, all the same. So follow us there. We've got great social content about money problems, money good things, money bad things. But mostly we talk about ourselves, which is also exciting. And archa.com.au, you can sign up for the waitlist and refer friends to jump up the waitlist.
Yeah.
And as I say, we have beta testers at the moment. And they generally come from the top of our waitlist. So if you're interested in testing it out, you only got to refer 3 or 4 people to get to the top, I think. Because we're very generous with the bump ups.
Okay.
If you refer someone, 200, 400, 500 places will bump you.
I haven't done any referrals yet, so I want to get on there and maybe refer a few people. But Yeah, I definitely suggest people to check it out. I've signed up to a few of the neobanking platforms now because I'm intrigued to see what you guys can do. So
it's really exciting. There's lots around, and it's going to be a very exciting few years for challenger banks, and a very concerning and eroding year for traditional banks, I think.
Yeah, I definitely agree with that. Look, Ollie, thanks for coming in.
No problem. Thanks for having me.
Cheers. Thank you for making it to the end. Before you run off, we need your help to grow this audience. Subscribe on your podcast app. Subscribing will give you priority access and help your fellow-minded listeners find Uncommon, or consider sharing this with a friend who you think would enjoy these sorts of episodes, and this will go a very, very long way in helping us build the audience. Don't forget to like us on Facebook and Twitter, or consider subscribing on YouTube as well. You just need to search for Neural, Neuralle, or consider following us on Instagram as well by searching Uncommon, UNCOMMON. But until next time, thank you so much for listening.